Welcome to Drill Down Earnings. We have quarterly results out from Broadcom. This is Cory Johnson, the Chief Market Strategist for Epistrophy Capital Research. It's one of the 50 most important companies in technology. In fact, it's one of the biggest companies in the world. Broadcom, we pay careful attention to the second quarter earnings for this company. Was it better than Wall Street estimate? Yeah, because Wall Street got it wrong. It was better than my estimates too, but barely. The estimate was like $14.98 billion. They did $15 billion. Okay, earnings per share also a little bit better. But it was a strong quarter. Let's look a little bit deeper to what the business did behind the kind of headline numbers here. So semiconductor revenues up 17%. Infrastructure revenues up 25%. AI revenues up 46%. Yeah, good quarter, good guidance too, as well as saying that growth rate's going to increase to 21% after the 20% quarter they just put up here. Now, when you think of this business, you got to remember that it's just been built by acquisitions and apparently really well done acquisitions, because we've seen Brocade, we've seen Symantec, now we see VMware being folded into this already very big business. But what really stood out here wasn't the addition of VMware and of course the change that had on the growth rate in the last couple of years, as well as the margins here. Semiconductor revenues hitting $4.4 billion. AI revenues, as I mentioned, at 46% at $4.4 billion. Just super strong in the AI revenue, AI semiconductor revenue. And their Ethernet-based business, which is kind of the other side of the dumbbell, right? You've got this cutting-edge AI stuff. Their Ethernet-based AI networking is up 40%, growing at 170% year over year. We're going to get to that with Hock Tan comments in a moment here. But when you think of this business now, it's nicely blended with 56% in semiconductors, 44% in infrastructure software, but it is a semiconductor business, all kinds of semiconductors that we're just cranking this quarter. They're custom chips, so they're building for the hyperscalers of Microsoft, Google, Amazon, that we call the XPU, right? Competing with NVIDIA, competing with AMD. They are advancing towards scale here. That business grew double digits. They say they're going to see 3 hyperscale customers deploy 1 million clusters by the end of 2027. They're also their switch business doing very well. Their Tomahawk next-gen switches at 102.4 terabytes. Just an amazing device. And their infrastructure software business also growing really fast. So how the stock react? Well, the stock sold off a little bit, down 5% in the day. That's actually, it's a decent sell-off. But my goodness, after a 76% rise in the last year, we'll take that with a grain of salt. The most powerful thing in this result, and hidden in the numbers and in the commentary, we heard a lot about it, was their AI growth. Their AI chip growth was really strong in this quarter. Next quarter, Q3, that we're living in right now, but they're not reporting yet, of course, because it's not over yet. They say it's going to be up 60% on a year-over-year business to $5.1 billion. It's the 10th straight quarter of dramatic double-digit AI growth for this company. Here's what Hock Tan had to say about the networking portion of that growth.
I think the AI networking, as you probably would know, goes pretty hand in hand with deployment of AI accelerator clusters. It isn't. It doesn't deploy on a timetable that's very different from the way the accelerators get deployed, whether they are XPUs or GPUs. It does happen. And they're deployed a lot in scale out, where Ethernet, of course, is the choice of protocol, but it's also increasingly moving into the space of what we all call scale up within those data centers, where you have much higher, more than we originally thought, consumption or density of switches than you have in the scale out scenario. It's in fact the increased density in scale up is 5 to 10 times more than in scale out. And that's the part that kind of pleasantly surprises, and which is why this past quarter, Q2, the AI networking portion continues at about 40% from when we reported a quarter ago for Q1. And at that time I said I expect it to drop. It hasn't.
So yeah, he was being conservative and he said he made a mistake because things are going so well at Broadcom in the AI networking business. All right, what's it all mean? What's your big drill on earnings takeaway, and what's the one number that tells us a whole lot? Well, Q2 earnings from Broadcom told us a lot. Strong growth from a giant company, 20% on a year-over-year basis now that the VMware acquisition is really folded into this business. $15 billion in revenues, almost $5 billion in GAAP net income, Non-GAAP net income $7.8 billion when you strip out a lot of the costs related to mergers, restructuring as a result of that merger, stock compensation and such. Just a really strong quarter of this company and a strong guy, but the one number that tells you a whole lot, the drill down earnings bite, 17%. That's the number to remember. Their entire semiconductor business growing at 17%, a giant business growing quite well. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.